What's going on, guys? Brian's here. Today is Sunday, November 26th, 2023, and I want to show you guys how I prep for the upcoming week, creating a blueprint for myself using advanced gamma exposure analysis. What we're looking at is the SPY, so we'll be focusing just on the SPY instead of the SPX and the QQQ, but what I'm showing you guys can apply also to the SPX and the QQQ. For the majority of this year, I've just been using the SPY for the advanced gamma exposure whenever I'm analyzing the upcoming week like this. So I want to show you guys by the end of this video, we'll have something that looks like this. These are the levels from last week, and for those of you within Quant Trading App, you guys know that this is pretty much what I like to share or what I've been showing you guys since Q1 of this year, but I decided to finally do a dedicated video just on this subject matter so you guys can start doing this for yourselves and come up with your own game plan and blueprint. These are the same levels here from last week. I believe I've already released a few videos this year on this type of analysis. This is the advanced gamma exposure tab from last week, and I take the analysis from here and then I plot it on my chart, mostly to share with you guys, but after a while you won't even need to draw the levels on your chart, as you'll just know from looking at this what levels are important for the week. So what we have here, let's make it a clean chart. Actually, before we get to the clean chart, it's always useful, I think, to look at the previous week just to get an idea of what we'll be discussing here. So as we see, for the abbreviations, for those of you that this is your first time you're seeing this, I'm just going to briefly go over some of the abbreviations. These are just shorthand for things that I've come up just to keep it simple so I don't have to type it out a million times. P1, it just means this is the strike price with the highest positive gamma. So it's the number one strike with the most amount of positive gamma. Down here, you guys will see N1. N1 is the strike with the highest negative gamma. If it's red, it means it's coming from a negative gamma strike. If it's green, it means it's coming from a positive gamma strike. Obviously, if you're watching this video, I'm under the assumption you have some sort of understanding of gamma exposure. If you don't, you can check out the playlist in the description down below. Next, you guys will see that I have AG. AG just stands for absolute gamma. These are the strike prices that have the highest absolute gamma. AG2 is the strike price that has the second highest absolute gamma. HOI just means high open interest. So all I'm saying right here is this strike has the highest absolute gamma, and it is also the strike price that has the highest open interest. This advanced gamma exposure analysis is aggregating all the expirations for the week. So the Monday, Tuesday, Wednesday, Thursday, and Friday. Last week was a holiday week, so the market was actually closed on Thursday, so that's why we only have 4 days worth of price action. On top of that, if we were to scroll here, you guys will see COI. COI just stands for call open interest. So this is the strike price that has the highest call open interest. And then if we scroll down here, we'll see POI. POI, this is the strike price with the highest put open interest. Then we have G flip. G flip just stands for the gamma flip strike. This is the strike collectively for the entire options chain for the SPY. Below this strike price is what it's saying is this is where the overall net gamma exposure turns negative, and above it is where the overall net gamma turns positive. Now, for all intents and purposes, all of these levels should be treated as advanced support and resistance levels. There's nothing more to it in the beginning than that. Think of it as a supercharged support and resistance level, and it's a little bit less discretionary. So if you ever struggle with trying to draw out support and resistance levels on your chart and you're like, hey, I don't know if this is a good support here, or should I have support here? Is this a good resistance level? Should I use here? Should I use the body? Should I use the wicks? If you don't like approaching trading that way or your technical analysis that way, and you'd rather have something that's a little bit less discretionary, this is the approach in which I highly recommend, as it is an approach that works really well for myself. So in this case here, having this creates a framework or a blueprint for myself, as I like to say. Above this here, if the price is above the highest positive gamma strike, you can think of it as we are in bullish territory. So there's all this green up here. If price is below the highest negative gamma strike, then we are in more so the bearish territory. So below here, this is where bears are going to be a little bit more confident. Above this here, these are where bulls are going to be pretty confident, and in between, you can think of this as going to be a battleground and things are pretty choppy. I like to draw this bluish transparent area on my charts, as I call this the open interest heat map, and we'll get to that in a second. So hopefully I haven't missed anything as I'm just sharing what the abbreviations go for. We'll get to the positive GEX roll off in a second, and usually I'll have some sort of negative GEX roll off, but we'll cover that in a second. So let's move right along and let's actually just clear our chart. Now that we've gone over that, let's actually jump to the daily time frame, as it is very important to start looking at a larger time frame to start off the week, either a weekly, a monthly, or definitely the daily. And just take note of what you can see with your eyes. So if we see right here, this is the previous major pivot on the chart for the year. This was the high for the year, and it is not the all-time high, as that is all the way back here, which is pretty far, so I don't have to worry about the all-time high for this current upcoming week. I'm just paying attention to a level that is within reason, that is pretty close to the current spot price. And we can see right here, this is 460. So I generally will not bother to draw this out on my chart, but just to showcase you guys, if you're new, you definitely want to have the level on your chart and just be aware of that's what that is. Probably come here and give it a label and just call it the 2023 high. And let's just put that on there, maybe make it solid. I like to make my level solid if it's coming from the daily time frame, and there we go, boom. So we know this is the high for the week. I'm going to delete that because, again, this video is not about every single support and resistance level. We want to keep it exclusive to the gamma exposure levels, but it is important to at least be aware of something like that, which is why you want to take a look at your daily chart, as well as pay attention to any major gaps that you can see on your chart. So here's a gap all the way down to 442, and we'll just call it 440 at this point. For me, I'll just tell myself, okay, 446, this is a level to be aware of, because below there we're entering a potential gap fill area, and then I know this is a pretty significant level. So 460 and 446, those are two levels that, without even marking them on my chart, I'll fall asleep tonight, and when I wake up to start the week tomorrow, those levels will already be cemented in my mind. Won't even need to look back at the daily chart, as I'll already be aware of where we are, but you can leave notes for yourself on the chart. I've been trading the SPY for years, so that's why I don't like to keep my charts pretty cluttered, and it's very relatively simple to actually just remember significant strike prices without having to draw them on your chart. Next, you want to take a look at the calendar for the upcoming week. So you can use either a website like this or Forex Factory, which is pretty popular, and this is just paying attention to the upcoming week. The reds are the ones that are pretty significant. So this week there's nothing too major, as this is just consumer confidence. We have the GDP report here, so this is pre-market. This will usually affect any swing trades, so usually by the Tuesday's close, I would like to make sure that I don't have too much risk for the rest of the week regarding the swing trades. And then we'll see, this is another pre-market report here, and then we have, this is during the open market session. So I just like to have some sort of an awareness for these. You can take a look at the Forex Factory, as sometimes they will put a little bit more information on Forex Factory in comparison to the other site. Also paying attention to the red, these should match up. Forex Factory will update a little bit more frequently, and it will sometimes have a catalyst listed here that you might not see on this calendar. Something like if Jerome Powell is having an unscheduled conference, or he's going to be talking, and we might not only know until it's about 2 days in advance or so, it might pop up on here. Whereas again, I usually just take the screenshot of this to start the week. As you guys have seen or have noticed within here, that's just where I'm just sharing this to start the week. Anything that's important, it's unbiased. I'm trying to leave my political views, my opinions, anything outside of this, especially when I'm trying to prep for the week. Again, want to be as non-discretionary as possible and just state things that are a matter of fact. At 10 a.m., it's scheduled that the consumer confidence report is coming out on Tuesday, November 28th. That is the fact. How I feel about it, whatever my thoughts, whatever the news is saying about it, is irrelevant at this stage in the planning for the week. Next, let's move on. Again, we take a look at Forex Factory, make sure there's nothing that's missed on the other calendar. I'm pretty sure you can just use this one. It's just that I've been using this calendar for years, and this is the one I've been super comfortable with. And occasionally I will use Forex Factory, especially during the week. I'll check in on this one. So I guess you can say if I was now starting out with trading, I would just use Forex Factory. Then obviously I'll copy and paste the QTA script for the week. So to just click this here, we'll just pop over to our intraday chart, go to studies, go to edit studies, and then just double click this. I've already copied and pasted it, paste it in, and then just press OK. And then the intraday script will be available tomorrow. So boom, so those levels will be on my chart. I have all studies turned off because, again, that's not what this video is about. So those levels are off. But then once I've copied that, now we can move on to the advanced gamma exposure tab. So that's under the options tab. We come to advanced gamma exposure. Just going to take a glance overall, starting at the top here. Once I notice this is letting us know that right now, regarding the options premium, the market is still pretty imbalanced right now. So this is just saying the market has had a strong rally. Without even looking at a chart, I can already tell we've had a massive rally, because usually these numbers tend to be much closer to each other. So if there's 60 million in calls, we'll often see, so if we subtract 20 million from there, we put the 20 million over there, we might have 40 million in puts. This tends to be a little bit more reasonable or closer, but seeing that there's over $60 million more in calls right now. With experience, I already know this is pretty absurd. So my assumption would be by the next monthly OPEX or by the quarterly OPEX, it'd be highly unlikely that the SPX would be, or that the SPY will be higher than where it currently is. But again, at this point, I'm still trying to leave biases outside, but I will take note of this just to say, this is pretty interesting. Calls are pretty rich, and that's what I'm going to tell myself right now. There's a lot of premiums in calls. It's definitely different whenever there's a lot of premium in puts. It doesn't take much for me to be very bullish in the SPY. However, it takes a lot to be bearish in the SPY, and that's just something that I've addressed in other videos, but we'll keep the reasoning behind that outside of this video. As we scroll down, we're looking at the entire options chain for the SPY. So this is all of the expirations right now. If it's not selected, that means by default QTA is not selecting it because there's no gamma exposure yet for that options expiration. As we scroll down right here, I'll just take a glance at this, turn on the absolute GEX, and just try to see if there's anything significant. Again, we can see right here that 460 is pretty big of a level right here in terms of positive gamma. We can see that obviously the current spot price is pretty significant, so that's 455, and then we can see next in line is down here 450. So this is pretty self-explanatory. I wouldn't bother marking these on my chart. I'll just know 450, 460, pretty self-explanatory, both pretty dominant strikes, both whole psychological levels, nothing really fancy or special to take away from that. Then I will come and unselect all of the options expirations, and then I want to focus on just this upcoming week. So we want to make more of a narrow focus for when coming up for a game plan for the week. We started with the top-down approach. So we looked at our daily chart, then we looked at the analysis for the whole week. And again, I've only spent about a minute or two on this. If I wasn't doing the video, chances are I've only spent about 30 seconds just looking at this page to see if anything stands out. This already stands out to me as 460. It's definitely possible for the SPY to hit 460 this week. If we take a look, that's only a 1% rally from where the current spot price is for the SPY. So that's definitely within means, and it is something to take note of. After I've selected just the upcoming week, so Monday, Tuesday, Wednesday, Thursday, Friday, we would then submit this, and this is where the magic tends to happen. Now that we have our report for this upcoming week, I'll take a look at this again and see calls are still significantly more dominant than the puts right now. So this is still at least letting us know that so far since the SPY has rallied, as we know, if we take a look at the chart, we've had one of the largest rallies in the past 15 years for the SPY from a net change perspective. So October ended down here. So this is October 31st. And then since then, if we were to take a look from this net close, roughly speaking from about right here, straight up to here, the SPY is up over 8.9%. So about 40 points. So about 400 points on the SPX, or about almost 40 points on the SPY. If we consider from the lows in terms of the straight rally, so the actual low to where we currently are, it is well over 10%. So this is huge, and it is not common. So that's something to take note of, and we can kind of see that in the data right here. So it's not surprising that we'll see a lot more call premium, but again, this is just letting me know that the weeklies right now are coinciding with the larger time frame. Now as we scroll down, this is where I start plotting the levels on my chart. If you don't understand anything to begin with, just keep it pretty simple and just start marking where you see these little bubbles on your chart. So if we hover over this one, this is 455. This is the strike with the most positive gamma. So this will be what's referred to as P1. This one right here is the strike price with the highest negative GEX. So this is our N1. I like to start with the absolute gamma. So if we take a look at this right here, this is 455. I will then come to my chart. Let's go back to the intraday time frame. Let's turn on our price levels, and I'll start it right here. So we have 455. All I'm going to do is just plot this right here, and then let's come here, make sure it's 455, and then I will just label this as AG. We'll put this on the right, make it the color purple, as I like to have for representing absolute gamma, make it a little bit thicker, and then I'll make this one solid for now. And then there we go. So now I know where the AG strike is. That is the absolute gamma strike for this week. Then this is also P1. So I'm going to also put P plus for letting me know it's also plus P1. It's also, if we come back here, the highest open interest strike. So I'm going to call that HOI. And then it is also the strike price that has the highest call open interest. So I'm going to put COI. Does that make sense so far to you guys? And I'm just going to press OK. So now I know for this weekly aggregate of all the expirations for this week combined, Friday obviously being the most dominant, Tuesday and Wednesdays are pretty, there's a both pretty large actually. This is obviously large because it is going to be the 0 DTE. Thursday's pretty weak for now, but as we can see this right here, the complete aggregate for this week, 455 is a dominant strike price. That's all we know right now. We're not trying to come up with any type of advanced theory. We're just saying 455 is the dominant strike for this week, and the information from the options chain is telling us this. Now I'm recording this video about 10:30, 11 p.m. Eastern time at night. It's actually better to probably do this about an hour or two before the market opens on the Monday morning, as the closer and closer you do this to the opening price is actually going to be a little bit more accurate. But as long as you do it, I believe after 6:30 a.m. Eastern time, you will have a pretty accurate read, because that's when the open interest levels are updated and you're closer to the opening bell. So gamma exposure is calculated based on the current spot price as part of the formula. So the closer and closer you can get to open, the more accurate. However, I've been doing this also late at nights on Sunday. Sometimes I do it at 1 o'clock in the morning on a Sunday. Don't always get a chance to do it pre-market on a Monday. So I like to do it from the Sunday, so that way I can start my week without being too anxious about getting prepped for the week. As Sunday, there's a little bit more time, at least Sunday nights. So here we go. So we have that marked. Now I'm just going to move right along and see what else do I need to mark on my chart. This one right here is 452. This is the gamma flip level. So I'm going to just duplicate this right here, 452, drag this down right here, and let's change this and just label this as G flip. I generally don't like putting caps, but let's just keep it consistent for this. G flip, since it is more of a tutorial video. G flip doesn't need to be that dominant for me, so I'll just make it a little bit more of a muted color, because it's just something to be aware of. Again, we're going to treat this as a support and resistance level, just as any of the other levels. This is all it's telling us right now. If price got down to here, it's probably going to bounce a bit, or it's going to be choppy or stall out. If it does break, it might want to come back to this level. That's all it's telling us. It's a level to be aware of. As we come down here, here's our 450 level. So let's duplicate this, and then let's edit this right here, and let's put in 450, and that is our N1 strike. So it is the strike price that has the highest amount of negative gamma. So let's make it red, and then let's also see it is also the POI. So let's put that right here, because it is also the strike price that has the highest amount of put open interest. So there it is on our chart. And now we have P1, N1, we have the POI, we have the COI, we have the HOI, we have the absolute gamma. So far this week is relatively easy, because so many of these strike prices are, in combination. Usually the N1 might not be the same as the POI, or it's definitely not going to have all of these at the same strike price. So we're going to have less levels on our chart for now. So we've already plotted 1, 2, 3, 4, 5, 6, 7 of the bubbles are already on our chart. 1, 2, 3, 4, 5, 6, 7. So that's 7 things contained in just these 3 levels. If you just are aware of these levels in itself, this can already help your trading. But as we move right along, we want to add a little bit more in our chart. So this is where I will come down here, and actually you could do the same thing up here. If you were to come up and actually sort it by the absolute gamma, you can do it this way. So if I were to click that, we can see the strike prices with the highest amount of absolute gamma. But I like to use the visuals, the graph, any excuse to look at graphs versus spreadsheets or tables with just numbers, I will gladly run to. So I'm going to turn on the absolute gamma. Let's turn this off for a second, and we already have our AG, which is our absolute gamma strike of 455. Next, I'm looking for what's the strike price that has the second highest absolute gamma, and this is 454. So again, this week is a little bit easier or different from other weeks, because everything is kind of clumped up together around 455, because it's just that dominant of a strike. But this is 454. This is AG2. And then I'm just going to make this dash, because it's not as significant. Depending on how significant it is, I'll either use the long dash or the short dash. But since it's so close to this one, I'm just going to make it a short dash. And then we also have this one right here, which is 456. So let's duplicate that. And then let's just go to edit properties, edit one of them. This is going to be AG3. And we're going to make this 456, press OK. So boom. So now I'm aware of this is around these strike prices, there's likely to be a ton of liquidity for the SPY. That's all the absolute gamma is pretty much telling us for now. Let's turn on our net GEX. Now this is where I start thinking about the what ifs and the scenarios and the likelihoods of XYZ happening. So let's sort this back by our strike prices, and let's make sure this is correct here. Yes. And this is where I start looking at these bars right here that are popping out. This right here, 460, is letting me know above 460, there isn't really that much positive gamma anymore. As we can see, it just falls off like a cliff. So in my mind, I'm going to mark this as something that's significant. So 460, if we come back to the chart, let's duplicate this again. I'm just duplicating the one that's pretty similar to it in terms of the style or the aesthetic. So I'm just going to switch this to green, and I'm going to call this positive GEX roll off, right? And make that 460, and boom, there we go. So this is where the positive GEX rolls off. So above 450 to 460, this is all bullish territory, as I will tell myself, as we can see with all this green here. The bulls, they live here. Where are the bears living? We can come down here, we can see all the way down to about 448. So this is where I will come right here. We can probably just grab this one. Let's duplicate this, and then let's go to edit properties, and then I'm going to say negative GEX roll off. It's not even one word, but I just make it one word for myself, and boom. So we have the negative GEX rolls off below 448. And then I'm going to look at the open interest heat map. You guys can already see there's a lot of blue right here. This is a deep concentration of high open interest strike prices. So this is a little different because we have a nice clump right here, and then we also have a really big clump right here. So this is something that I don't believe I've shared within Discord. So we'll share this. So I'll do this now. This is a little bit different. So we have between 450 and 448. That is a decent amount of open interest. So this is where I'm just going to draw my rectangle like this down to here. And because it's this rectangle, I'm just going to make sure it actually ends at the end of the week right here. So let's go all the way to Saturday, because I wanted to stretch the full width of the week. And I changed it to that blue. And this is where I will drop the opacity usually to 75 or 80% or so. So just make that okay. Boom. So this is just letting me know, again, right now we're dealing with a matter of facts. We're leaving opinions and biases aside, and I'm not trying to project anything onto the chart. I just want the hard, cold levels, the direct conversion of the data from this graph plotted on my charts to assist with my decision making this week. So this is letting me know there's a decent amount of high open interest in that area. We also have another high open interest spot right here. So this is between 455 and 454. So all we have to do now is just duplicate this and then drag this up here. You guys can also see if you do this every single week, you don't have to keep redrawing everything out. You're just going to end up just shifting and moving things up, and it becomes easier and easier and quicker. So now what I have on my chart are two high open interest strike price zones, we'll say, within here and with here. And high open interest areas tend to be areas of liquidity, and that's where price likes to hang out. Price is not really going to hang out in an area where there isn't a lot of liquidity, and if it does, chances are it will correct itself for the following week. Now let's see if we come back to the chart, if we are missing anything from the data right here. Scroll up, there's nothing really of significance. Generally, anything past the 2 sigma strike prices, I won't even pay attention to. So 2 sigma, let's just say 2 sigmas down here this week. I won't even bother, accounting for anything down here. If it's past the 4.5 or 5% drop the week, that's not pretty common. So I won't list it, but you guys do know I take a screenshot, I save this, and I highly recommend you guys take a screenshot of this at the start of the week. And then at the end of the week, you go back and you analyze and you see what did you miss, and this is how you get better, and this is how you improve. And then the next time you'll say, oh, I noticed something, and then if you keep noticing something that you've missed multiple times and price action keeps doing something, now you might have caught something that's some sort of an edge, and that might help you in the future. 440 is a pretty powerful strike. So we could maybe mark this, but this right here is just a little bit, if this is a little bit larger, I generally, if a strike is this far away from the current spot price, so this yellowish strike in the background is letting us know this is the closest to where the SPY currently is. So that was the last quoted price of the SPY. So this is the strike price that's pretty close to it. So that's why it's lit up. Whenever there's a strike that's pretty far away, in this case, this is almost a 3.5% away from the current spot price. If the negative gamma was pretty high, let's just say it was about close to how much negative gamma there was here. That would be pretty significant for me because the strike price that far away should not have that much gamma showing. It should have price get a little closer to it before it starts showing. So that would be significant to me, and I would definitely mark that on my chart. The same way, if let's just say there was a random strike price up here with a ton of positive gamma, that would be pretty strange to me, and I would say, it's so far away. It's over 2.5–3% for the week. And again, this is for the whole week. I would be aware of that. This is where I would start putting some strike prices on a watch list for myself. So I already have 460 for the Friday expiration for the weekly on this watch list. So this is 460. I already have 450, which is down here. So this is the P1 strike price on my chart. And then I also have a strike price. So this is from the gap fill. So if we actually zoomed out for a second, and we were to come right here, so 446, that's if the SPY was to breach this level. It would be highly unlikely, but if it did, and we were looking at some sort of a gap fill, I already have the puts loaded up in a watch list, so I wouldn't have to look for it as the week started. So these are linked to a chart on one of my other monitors. All I have to do is just click between these and it will pull it up on the other chart, and then I can trade these if I'm deciding to just trade long call or long put options, or if I'm running some sort of a spread. On top of that, I already have the delta for these, so I'm aware of what the deltas are to start the week, but this is getting a little bit more advanced, I guess, for the purposes of this video. I like to know this type of information sometimes to start the week, just to get an idea for the probability. So 446 is a very low probability put to be in the money by Friday's close, but it is still something I think is cool to have up on your chart to be aware of. As the more efficient you become in your preparation, the chances of better trading decisions you'll make. And this applies to anything in life, as you know, the more you prepare, better chances of success you have of achieving your goal. I happen to be a filmmaker outside of the stock market. We spend a lot of time in pre-production. If I'm going to be filming some sort of a 5 or 10-minute short film, we might be preparing for about 2.5 months in terms of rehearsals, blocking, staging rehearsals, camera rehearsals, working with the actors. There's a lot of time that goes into pre-production, and we calculate for every single minute of the day of filming. So if we're going to be filming for 12 hours, we know how much time has to be dedicated to lunch. So if there's going to be a 45-minute lunch break, if we're working with SAG actors, there's going to be a 60-minute lunch break. We know there's going to be a session before the start of the day, and it's also going to be a break at the end of the day. So we already have to count for 3 hours of production time. How long does it take to load up the van? What type of equipment are we going to be bringing for the production? How many hours will we spend for filming? So if camera is going to need about 4.5 hours of preparation in terms of building out the rigs, the lighting, that leaves X amount of time for the actors. So if the actors have 5 hours and that ratio is pretty low, we need to calculate that. So all these decisions are done in the filmmaking process. If you work in construction, if you work in real estate, if you work in the medical fields, if you work in any type of industry that is dealing with professionals, you know preparation and planning. If you work with athletes, if you're a coach, if you're preparing for a major competition, you have to prepare, and it is very similar with the stock market. So the whole point of this video is to show you guys a systematic approach to how you can prepare for the week. So if we stopped here, just having these levels, this will already create a framework for ourselves, and this will already provide some sort of a structure or a plan. Because if I was to go to a clear chart right here, and we just looked at this already looks like there's no preparation or there's no plan for the upcoming week. The other thing that I really like about using gamma exposure is, in a sense, forward looking. It is based on the information for the upcoming week. Yes, what has happened in the past can affect the future, and that's what we use with technical analysis. That's when we might draw some sort of trend lines on our chart. So yes, we can draw some sort of patterns like this, or maybe we will draw something like this. We might have our own support and resistance. We already know 460 is a major pivot level. This is where we might draw some of the gaps in our charts, but it can clutter our charts, and at the same time, a lot of the information becomes redundant. Versus if we just have these levels in our charts, we already have a framework that the options market is, in a sense, pricing in. And then we'll notice here that, look, 448 happens to be some sort of a key pivot level or some sort of a support level. If we look at 452, it was a previous support level right here. If we take a look at how price was pretty choppy, we can see that there's a lot of liquidity last week around 455. As price rejected off of 455, it came back down to this level, and then it bounced, and then it consolidated here. So this is reiterating how dominant 455 is, or how important it was prior. But for the upcoming week, let's just say we didn't see a lot of absolute gamma around 455, then the expectation would be price would move away from 455 pretty quickly this week. This is where I like to start forecasting and start coming up with some sort of realistic scenarios for myself based on positions in which I might currently have. This is letting me know where I might need to protect myself, where I might need to hedge, XYZ. What we do know right now is if we treat each of these levels as a major support and resistance levels, the purple strikes are going to be strike prices that price will want to gravitate towards. The gamma flip level is going to act as a solid support or resistance level as mentioned before. The same thing with N1. If price gets to N1, it's probably going to want to bounce back up to this G flip level, and then we'll see what happens if price consolidates around here again, as it might want to re-enter this area where there's a lot of open interest or there's a lot of absolute gamma. On the other end, if price was to hold above 455 and then it got above 456, it is highly likely that it's going to want to head towards where the positive gamma rolls off. If this was the highest positive gamma strike, then I would be thinking that if we hold above 456, then we're likely headed to 460, and I will likely just grab some sort of out the money call butterflies or some sort of broken wing butterfly, or maybe I'll just grab the 460 calls. On the other end, if price was to get below N1, then the expectation would be that we would head down towards where the negative GEX rolls off, so right about here. So this is not really that large of a move. So my expectation would be price would be pretty choppy in this region. So in other words, this is a scenario in which I can think about for this week, as I will save this screenshot. Sometimes I'll send it to my phone, so that way I have it just to look at it if I'm laying down in bed and I'm thinking about what's likely to occur. Again, being aware of what are the catalysts for the week will also help. So if I know there's a major catalyst on Wednesday, the major catalysts in my opinion are the FOMC announcement days, the CPI reports, which are pre-market, so these are always 2 p.m. at Eastern time while the market is open. This is always pre-market, 8:30 Eastern time, anytime in which Jerome Powell is talking. So Jerome Powell, as long as he holds the title that he holds for the Feds, these are the important, significant catalysts for me. Everything else I tend to ignore. Occasionally, the jobs report might have some sort of significance, but these are the main driving factors. At least since the pandemic of 2020, these have been some major driving catalysts for the S&P 500. With this week not having any major catalysts, the assumption is going to be without any surprise factors, anything like that, price is going to want to be around here, or it's probably going to be around here. And if price holds, or it will probably be right around 456. I can see it make it up to 460, but I don't see it holding 460 unless something changes. We'll take notice. This is where maybe on Wednesday I might take a look at the gamma exposure. I won't need to re-update the levels on my chart because that's the purpose of this stream here that is constantly updating within QTA as the week is progressing. This is the SPY weekly, and then we have the SPX weekly options. We'll automatically be updating here. So I'll just be glancing at this as the week progresses to see if there's any major changes regarding the P1 strikes or the M1 strikes. Obviously, if I start seeing a ton of positive gamma growing higher and higher, some of the higher strike prices, then I would assume we're probably going to continue to head higher until price gets to a very sensible or logical strike price. Maybe it's 2 sigma resistance, maybe it's the QTA sell zone, maybe it's just a major structural pattern that's forming, something like price goes higher, it fails, tries to go higher, and then it fails, and then from some sort of a head and shoulders pattern, maybe then we'll reverse on the backside weakness, XYZ. Those are other factors. We're not trying to predict what's going to happen. We've just been trading long enough to be aware of what are the type of patterns that form as price looks to reverse. What we do know is that price likes to hang around higher liquidity zones. Now we have our high liquidity strikes on our chart. If we take notice, so this is the plan for the upcoming week. I will be sharing this in the Discord shortly after recording this video, and then I'll likely get a chance to release this video after the market closes tomorrow on Monday. If we were to just conclude here by looking at last week's gamma exposure levels, and we take a note of what do we know or what can we see on this chart, we can see price held above the +1 gamma strike, and what did it do? It head towards where the positive GEX rolled off, but it could not go much higher. There was no major catalyst last week. Previous week, we had the CPI report, and that's what caused this gap up. So we've covered this before. Major catalysts will break a lot of this, but what we can see is price failed to go past 460 2 weeks ago. Last week, price got above the positive gamma strike, and then we see what happened. So if we take a look at the screenshot, which is why I love taking the screenshot and then going back to compare and see what happened. As we come here, we can see price got above 452, and what did it do? It rolled right up to about this region here, and then it didn't really get much higher. If we come take a look at our chart, that was 456. We can see 456 is where price just stalled out at. If price was to get below P1, right? So actually, before we conclude on that, let's pull up my notes in which I would have said something within the Discord. Right about, let's just search and see what I would have said. So I would have mentioned there we go. So 448, I believe, would have been the strike. So there we go. So this is what, because these strike prices, again, I end up just remembering them. Is how I can just recall it in the past here. So last week, again, because the levels didn't change, I know 452 was pretty important. So was 448. But one of the traders, I believe you guys had already mentioned this on the Monday. This would have been, what day of the week is this here? So this is the 21st. So 21st, for context, you guys watching this video right here would be on the Tuesday. Came in and mentioned this here, that a couple of you guys already mentioned this out, but just saying 452 is the key strike. Once the SPY is above 452, the bulls are in control for the week. Below 452, price should get sticky and choppy with all the open interest and absolute GEX below. But 448 would be the target for the shorts. So this sentence right here, I'll just break this down for you guys that are new to this. Below 452, price should be sticky and choppy with all the OI. Why am I saying that? If we take a look, below 452, so right here, so if price got below 452, it should be sticky and choppy. The reason I'm saying that is because these purple strikes, the absolute gamma strikes, price will be pretty sticky and choppy. And then on top of that, all this open interest. So we have the open interest heat map, we have all this absolute gamma, and we have the high open interest strike price down here. The expectation, in my opinion, would be if price broke below 452, yes, it might continue going lower, but it probably won't be a clean drop lower, especially since there were no catalysts on the horizon. If we knew there was a catalyst on the Wednesday, then I would probably say, hey, if such and such is bad, so if it's a bad CPI report, or if the market is interpreting the news as negative, whatever the catalyst may be, that's a different reason. But if there's no major catalyst, price action is not going to make an explosive, or it's not very likely that it's just going to make some explosive move that wasn't already expected. It takes catalysts to make price do an unexpected move. So in this case here, you have to ask yourself, is this a short trade would you even want to take? Because from 452 down to 451, that isn't really that large of a move. From 451 down to 450, that isn't really that large of a move. Then from 450, if price is going to be choppy around here, you're pretty much going to be stressed out if you're trying to scalp or take some of these small positions. So these are trades in which I tell myself, hey, you know what? If 452 breaches, I probably won't take any type of trades because I'm not really interested. However, if price got below 448 and then it couldn't hold this gamma flip area, then I would tell myself, okay, now I'm interested in where's that P1 strike? Okay, 441. If it's happening on a Wednesday, I might tell myself, you know what? 441 is too far away for the Friday because it's not enough time left in the week. Yes, it can happen, but that's not very likely because from the start of the week here, if we were to take a look from the start of the week down to here, that is a 2.10% move or so. So let's just call it a 2% drop. It can do that in a week. It has done it many times before, but for me, I would rather be safer with my days till expiration and maybe go with the following Friday 440 strike. Might as well make it 440 instead of 441 because the liquidity will be better at 440. But hopefully this is making sense to show you guys how you can come up with a plan, because from these levels above 452, you can tell yourself maybe price will trade up to this direction. Now you have a clear area to say, okay, below here, I'll probably take a stop loss because I don't want to be interested in what could happen down here. And even if you get, a 452 call and price breaks down here, it might not continue selling. But if you're in a call, you're just losing premium waiting for it while it's choppy down here. If it's going to be choppy down here, you don't want to be sitting in a call that's all the way up here and waiting and hoping that it's going to happen. But above here, you're in bull land price might likely head up a little bit faster. And this is what we got. The same thing below here. I'm now interested in maybe getting some puts because price will probably have a faster time going down here, and the path of least resistance would be down. It's going to be harder for it to go back up with all these levels in between. Above here, the path of least resistance is up. If price got below here, in between here, it's kind of a neutral, just a choppy fighting area down here. So avoid this, save my mental energy, or maybe run some sort of an iron condor in this region, maybe run an at the money calendar spread. Anything to avoid trying to determine some sort of directionality. The same thing, this is where I'll avoid looking at certain patterns. If I see flags forming and all that stuff, this is not the area in which I want to pay attention to technical patterns. Above here in this region, if we were to jump to, let's just say something like maybe a 5-minute time frame, if we're day traders and we're looking for scalping opportunities, and we take a look at this here we have a pattern forming. We have either a bull pennant, we have a bull flag, whichever way you want to dissect it, and then we get the break. Then what do we get? We get see if we get any other types of patterns forming. As we scroll through this week, again, this is a very choppy, low volume week overall because it was a holiday week, so not a great example for price action. Let's just jump back to the 15-minute time frame. This is where you can combine some of the technical analysis you might already know around key levels. Then when you combine that with some of the Quant Trading App scripts like the intraday levels, which will add the max pain strike to your charts, it will also add the 2-day anchored VWAP. Now you have some confluences that are a little bit less discretionary. If we were to take a look at what the max pain was for this upcoming week, that can also help us, and you can plot that on your chart, but there's no need to do that because you guys know it's part of the intraday script. But for this video here, let's just click to the Friday expiration and see the max pain strike is 445. If we come here, 445 would be all the way down here. So this is going to be max pain. Again, I won't need to draw this on my chart because it is naturally part of the Quant Trading App script, and it will plot the level on your chart once the market opens. So there's no need to do that, but I'm just sharing with you guys, you can add some more non-discretionary levels. Max pain acts as a major support and resistance level. If you've been part of QTA for a couple years or a year or so, then you've already seen it in action. So there's no need to explain how significant of a support and resistance level it is. The other thing to take note of when you have a framework for yourself for this week, it can keep you out of trouble. So in my case here, if you were looking to be short just because the market has rallied, you can tell yourself, hey, I will be short to start off the week. However, if we're above 452, I'm not going to fight the trend. I'm not going to try and, be stubborn and stick to my bias because I think the market has to go down just because it's rallied more than 8% this month. That's not a good approach. This can keep you out of trouble. You can tell yourself, I will be short, but above 452, I'm not messing around with the rally anymore because maybe we're heading to 460. However, if we're holding below 452, I will comfortably hold my short positions. If we get below 448, I might add to my short positions, or I might open up some short positions. Then my stop loss will be above 452, and maybe I'm targeting all the way back down to 440. That's how you can approach this also. If we turn these off and let's just take a look at this upcoming week here, this is a similar situation. There is a lot of positive gamma up here. It is not as much there as there was last week, and the P1 strike is at 455, so it's not really much higher. If we were to take a look at it one last time, we can see, however, this is also the second positive gamma strike. So in this case here, 457, I will mark that on my chart. So let's just duplicate that right here, 457, just because the P1 is clumped in with 455. Might as well add the P2 strike. And this is why sometimes you guys will see I have P2 also on my chart, or I might have N2 on the chart. It is usually if I'm just looking for something as an additional strike, just because the main P1 or an N1 strikes happen to be clumped in with something else, and I want to have some sort of a separation. The N1 strike is here, but there's no need to really put an N2 strike as they're all grouped around here, and this can help also provide a little bit more context. So now we know this can be above 457. This is don't really want to mess around being short between this region. However, if price is below 457, definitely below 455, this is in an area where bears will have a little bit more of a chance. And if we get all the way back down below here, then we already know bears are definitely going to be happy. And then at that point, the week is probably coming to an end, because I highly doubt we would come all the way down here and also fill the gap within the same week without some sort of a catalyst. Guys, hopefully this video helps. I know it was long overdue, and this is moving forward. Reference this video. It is the same methodology in which I've been using. You guys can, if you're in QTA and you head to some of my notes, you can go back in the past and you will see some of this as I've been sharing here. Here's the screenshot. Here's how it looked. And then sometimes if I get the chance, I'll share how it actually played out. You guys can see these are results. We had I used to put WT day, it just means week to date, AG, but now you guys know, since there's a video, AG just stands for the absolute GEX for the full week. You guys can see price is pretty choppy throughout here. The absolute gamma strike is generally going to act as some sort of a magnet. So this is a case in which that strike price was touched multiple times throughout the week. Here it is again, similar thing. Sometimes I would put my notes on the chart, but at this point now, you guys should have some sort of an idea for what these mean. If there's a lot of negative gamma, I will sometimes make it red here. Green is meaning there was a lot of positive gamma on the chart. So this is all that positive gamma. This is all that negative gamma down here. So sometimes I like to mix it up and just add a little bit more of the colors to my chart. So in this case here, this is a lot of open interest, but it's also a lot of negative gamma. So I'm not going to make it red. I just want to know that there's a lot of negative gamma, but it is implied that it is a lot of put open interest down here because we're in this negative gamma territory. So you can make this, red rectangle red. I make it red because it's coming from a negative gamma standpoint, which is coming from the puts. Even though if price got down to here, it does not mean I'm looking to short. This will likely act as some sort of support and price would likely bounce. However, if price came back to the G flip level and then it got rejected and we're back in this red area and we break, it's a different story. So context is important. If you want to just keep it neutral, you can just keep it as something like a blue level or this yellow to just, again, keep it neutral. As we scroll right along, again, there should be plenty examples within here for you guys can see showcasing how this has worked in the past. Thanks for watching, guys. And again, I really hope this helps. I'm looking forward to hearing from you guys. And please feel free to share within the Quant Trading App Discord how you mark up your charts using the absolute gamma tab. And if you have any questions regarding if you did it right or if you want any feedback, post it in the Discord and I'll be happy to help you guys out. Enjoy, take care, and happy trading.